Welcome to Money Talks. I'm Genevieve Westcott with your latest financial news from across New Zealand and around the world. Coming up in this edition, farm sales here at home are way up. But what about those prices? What and where are the hottest properties? Global dairy trade auction. Prices plunge. What's it likely to mean for the forecast payout? Would a dairy payout drop see 20% of farmers struggling? And why is Fonterra now holding a special meeting of shareholders on June 25th? And the New Zealand dollar reacts as the International Monetary Fund meeting in Washington on the weekend commits $430 billion in fresh money to protect the world economy against Europe's ongoing debt crisis. But first, here at home, the Real Estate Institute of New Zealand shows that the number of farm sales has increased dramatically over the last quarter. Farm sales surged 109% in the March quarter. Joining me now to talk about it is ASB's Rural Segment General Manager, Grant Abbott. And Grant, this is an incredibly high level of farms now being sold. Yep, no, it's certainly high even in terms of historical context. Obviously, we're coming from a pretty low level off the back of the global financial crisis. But even so, relative to those sort of pre-GFC levels, the sales are quite high. But not much in terms of price changes, however. That's the sad news. Oh, I mean, it's interesting. With all these things, it's lies, damn lies and statistics. And I think you've got to sort of drill into actually what's going on in the sort of baseline numbers. And one of the interesting call-outs is around dairy farms. So dairy farms have actually dropped slightly in price, gone from about $33,300 a hectare from about $33,500 a year ago. How do you account for that? Because dairy is king at the moment. Well, I think the key piece is if you rewind the clock 1 year, obviously farmers were staring down the barrel of those record payouts. Of course, the landscape's a little bit different now, and I think there might be that small degree of caution. Okay, the median price per hectare for all of the farms sold rose 14.1% to $17,577. Not bad. No, not bad, but as I said again, you've got to sort of dissect what's going on in there. Another interesting call-out is in the horticultural space. Of course, we've got this PSA problem in Bay of Plenty, and you look at the horticultural prices and you think, well, we'd see a dramatic fall-off, but actually that's not true. Hort prices have gone from about $128,000 a hectare the 2011 year to more than $200,000 in the current year. And then if you actually look at the Bay of Plenty in particular, it's gone up by $60,000. So it's interesting just to sort of see what's actually going on there. That's quite unexpected, I would have thought. And looking at all the farm sales, Grant, where were the hot properties selling? Where were the really busy regions? In our dairy regions predominantly, in Canterbury and Waikato. Interesting enough, Hawke's Bay, a predominant sheep and beef space, not doing so well, and the only province that in fact dropped back. Yeah, how do you figure? It's interesting because you would have thought that with sheep and beef prices being at reasonable levels, you'd see a reasonable sort of pick up there. But of course, Hawke's Bay, very traditional, closely family-held businesses, maybe just not wanting to move on at this point. Let's talk about our Treasury now for a minute, Grant. We sent one of our representatives by the government, went over to Washington this past weekend to be part of the IMF World Bank talks. Of course, they're looking for more money to bail out the European debt crisis. We're being asked to contribute more money. Do you think we should? Well, I think the key piece is that the biggest sort of black cloud on the economic horizon at the moment is what's coming out of Europe. Obviously, Spain, the bond yields have spiked. There's a lot of concern that there will be resistance within the country to budget cuts. I noticed also over the last couple of days, the Dutch government has resigned because they can't get their budget cuts through. Now, this is really something, isn't it? The Dutch, when the Dutch start to struggle, that's a wake-up call. Well, you know, as a powerhouse of the EU, behind only sort of Germany and France in terms of the product, yes, it is a key concern. So if you actually have a look back over the last couple of weeks, whenever Spain's been in trouble and those fears have risen, our currency and our stock market, like all other commodity-based ones, have taken quite a hammering. And so I think it's probably in our best interests in terms of sort of contributing to this stuff to have that bank of last resort. The IMF, of course, is looking for more money from us, also from the US. The US continues to say they're not going to bail them out anymore. What's that going to do to the Kiwi dollar? Well, again, it just depends on what actually falls out of the sort of European space. If we see continued turbulence in that space, the Kiwi will get buffeted. The question is, though, whether it will actually break significantly below the 80-cent US mark. So at the moment, we're sort of seeing it playing within a range 80 cents US to 82 cents US. And so, as I said, the key part is, will we actually see it break through that range?
Global dairy trade auction, of course, dairy prices way down. What are you picking for the forecast payout at this point in time?
I wouldn't like to put a number on it because we're still, a long way off. But just talking about the influences that are floating around in there, the big sort of issue is effectively the supply piece. There's much more supply in the milk space. It was up 3.1 world production last year, led by New Zealand's 10% increase. So the supply piece is up. The demand is still a little subdued. Obviously, there's still some data, unexpectedly low data coming out of China. And so what you're actually seeing is a kind of squeeze in terms of sort of slightly lower demand but higher supply. If you actually consider the population food equation, over time you'd expect to see, in fact, the demand well exceed supply. So what we've got is sort of a sort of short-term growth issue at the moment where the supply and demand side aren't sort of in tandem, and that's basically what's going to squeeze through. So the key piece for next year will be, in the New Zealand sense, will be how that supply and demand marries up. And of course, also with New Zealand, the overriding piece is what does our currency do?
Some analysts are saying if the payout went as low or below $6, that could be $1 billion hit to the New Zealand economy. Pretty sobering stuff.
Oh, it would be a significant impact, and of course, in itself, it would be interesting to see what that will do to the currency.
Very quickly, I want to ask you now about Fonterra going to its shareholders on June 25th for a special meeting. They say they want to sort out the debate over TAF once and for all and put it to a vote. This is extraordinary, isn't it? Because according to Fonterra, most shareholders think it's a great idea.
And also, if you look back about a month or so, they were saying there was absolutely going to be no chance of them going to another meeting. Basically what they're saying is that we've got a spillover effect in terms of a minority of vocal shareholders getting into the media, and that's saying that it's beginning to cause Fonterra problems on the global stage.
Yeah, apparently recently when Theo Spearings was in China, they were being asked all the time, what's going on with your shareholders?
Yep, that's right. So obviously security of supply and those kind of things are an absolute key point in the mind of the Chinese.
How do you think the vote's going to go?
Well, it's interesting. If Theo's correct, then it should sail through. But I guess it depends. There is a lot of background noise here, and it's still not entirely clear what level of dissent there is in terms of those Fonterra shareholders.
Thanks, Grant. Coming up after the break, succession planning on farm. Complex and complicating farmers' lives, especially with those tax changes looming. Expert Charles Rao is in the house. As we head to break, answer this in our Farmers' Facts and Figures quiz. What was the median price per hectare for New Zealand farms sold in the 3 months to March? Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, what was the median price per hectare for New Zealand farms sold in the 3 months to March? $20,056 per hectare. Buying a farm is a first step in the journey for many farmers, but what happens when the time comes to move on? With succession planning, there are plenty of fishhooks, among them looming tax changes. Joining us now is an expert on succession planning and a partner at BDO Gisborne, Charles Rao. And Charles, you're not just a tax specialist and a chartered accountant, you also are a farmer. What are you running in Gisborne?
Deer, sheep and beef. Succession is a huge issue at any time, but with recent tax changes that are afoot, it's going to become harder for the next generation. Okay,
let's talk a little bit broader about succession planning, which is really your area of expertise. How are New Zealand farmers doing at it?
It's a mixed bag. There is a lot to happen. Recent surveys have shown that up to 30% of business owners intend to retire in the next 10 years, and less than 10% of those have a formal succession plan. Succession planning in farming can take many, many years because of the affordability of farming, and specifically the affordability of the land. So while livestock may change in 1 year in terms of the ownership of livestock, often the ownership of the land takes many, many years. For that reason, what BDO have been proposing is to widen the current exemption that is proposed for succession planning so that it encompasses the most common forms of succession planning and essentially puts the next generation of farm owners in the same position as what they would be if they purchased the livestock off an unrelated party. So they're not where there's genuine succession planning but not stuck by their parents' previous elections.
Okay, let's bring in Grant, because you're also you were a tax lawyer and also an accountant yourself. You know a lot about succession planning. Where is it at from your point of view in New Zealand today?
Just having a look at the demographics of the sort of farmer population out there. You'll have heard the adage that the average age is something like 58 or 60. I'm not sure what the true number is, but it is a very ageing population. And what it means is that at some point there is going to be a sort of population mushroom in terms of farmers coming off the farms. That brings into a number of questions. One of the primary ones obviously is do they have family who want to pick up the baton? I think it's a sad fact, but a lot of Generation Y potentially aren't interested in the old farming lifestyles, and so are coming off the farms. And so that's leading to a trend of consolidation. We're seeing it particularly in the sheep and beef space, but not even dairy is immune to it. So that's talking about bigger farms, probably more productivity, and more and different skills that farmers actually need going forward, from the sort of old ma and pa sort of model to that corporate model.
Yeah, but isn't it interesting too that farms are becoming more and more expensive, more and more corporatized? This is going to change the landscape of succession planning completely, is it not, Charles?
It's been a growing trend. It shouldn't be a surprise to many advisors, but I think advisors that are advising succession planning really need to step up to the plate to ensure that the process is smoother than it has been in many circumstances. Succession planning really needs to start with the whole family group understanding what each other wants to do before moving forward into the financial structuring. Often people delve straight into the financial structuring and it can have adverse results at the other end when the whole family isn't understood what the outcome is meant to be. In terms of corporatisation of farming, yes, it is partly driven by the affordability, but it is also partly driven by essentially not getting the planning done early enough and leaving it till an event forces a sale such as farmer health, etc.
What seem to be the most popular structures at this point in time for most farmers? What should they be thinking about?
Sure. We've done a survey of all agribusiness BDO partners around New Zealand, and we represent more farmers than other accounting firms, and what we have seen is a trend towards limited liability structures. So what that means is that farmers are becoming a lot more aware of the potential on and off farm liability that they could have, and so they're using the succession process to move to a limited liability structure. We're seeing partnerships used a lot less. Trusts are still in there, but often with companies below those trusts for limited liability protection.
Grant, what do you think farmers need to really take on board? Agribusiness, like every other part of the economy, becomes more and more complex as we move on. Government seems to give us more rules, more legislation, not less. What should they be thinking about now?
As Charles said, you need to have everybody in the room to see whether there is going to be succession per se in terms of actually having your own family effectively take it forward. If not, then that's a significantly different question to the scenario where effectively you're looking at potentially selling up. In terms of Charles's point about the corporate structure, one of the benefits of a corporate structure in terms of having shares is they're much easier to move around, much easier to sell. So you don't have issues as you do with a for example, sole trader kind of scenario of having to transfer land deeds and that kind of thing. So you also get a degree of greater flexibility too in terms of being able to on-sell, split up, whatever the farm, through those shareholding methodologies. What
is the risk, Charles, if you don't come to grips with succession planning for your own property? And have you seen this before?
Essentially, an event may happen where, for example, farmer health suddenly deteriorates and they're forced into selling the farm in suboptimal circumstances. Maybe the market's low, or maybe they wanted to have succession to the next generation, but because the circumstances were forced on them and they didn't have a plan in place, the succession didn't succeed.
Interesting that you yourself went through succession planning. How did you find it?
It's a good process to understand where the rest of your family wants to go, and I think that's a great place to start. And it can be achieved with great outcomes if it's managed properly. You know, for us, it brought our family closer together. It helped us achieve our goals. You know, we went from essentially 1.5 to 3 farms, and you know, it was a good process for us to go through. If it's not managed properly, it can have the opposite effect.
So what did you learn? What are your top 2 or 3 tips for farmers listening now about entering this process?
Sure. Don't assume when you're starting the succession process. Understand what everyone wants, what they want to do. Once you've got agreement on that, then you can start to move to essentially the financial aspects of succession planning. And you may have 3 or 4 different models before you actually decide on one, because there are so many different options out there in terms of financial models that there are many ways that the objectives can be achieved.
I think one of the key things is it is an extremely complicated area, and it's important to have the right advisors at the table, people you can trust to actually work that through. I think that's a key thing. There are a lot of horror stories out there in terms of sort of 15 years down the track, the structure hasn't done what it was anticipated doing. There's been some dissension, that kind of thing, and yeah, it's all turned into tears basically. So I think that's the key thing. Make sure you've got the necessary people at the table at that point where you're actually sort of working out what everybody wants to do.
Great, thanks gentlemen. Coming up after the break, Future Proof. Our experts tell us what they'll be watching over the next few days. And we take the pulse of the global economy with more on that big G20 meeting in Washington over the weekend with the IMF and the World Bank. Speaking of which, answer this in our Farmers Facts and Figures quiz. Who's the new president of the World Bank? Clue, he's an American. The answer after the break. Welcome back to Money Talks. Just before the break, we asked you, who's the new president of the World Bank? An American physician and the head of Dartmouth College in New Hampshire, Jim Yong Kim. And now it's time for Future Proof. And we're back with Charles Rao and Grant Abbott. And we're talking Crayford Farms, which finally go to the Chinese. Shanghai Pengjing will be celebrating big time. Let's listen to what Land Information Minister Maurice Williamson had to say, announcing the government-approved sale of the 16 farms to the Chinese company on Friday, with strict conditions attached.
Ministers don't have the luxury of deciding, do we like this or we don't like it. We are bound to act under the statute and the regulations that accompany it, and we have today decided we will do it. There are 27 quite stringent conditions placed on the purchaser, which include the investment of $16 million in the setting up of a farm and some scholarships, protection of various flora and fauna covenants, even the ability to have to hand back certain sites, a par site, to the treaty, the Office of Treaty Settlements at no consideration, are all as part of those conditions in the sale.
So Grant, the deal is done. Crayford Farms go to the Chinese. Your reaction?
I think it was predictable. Obviously, we're becoming more and more aware of the pressure that the Chinese government were putting on the New Zealand government. But beyond that, as a sort of trading nation, it does sort of make us something of a laughingstock where we're busy, particularly through Fonterra, buying land in China, and they're not having an ability to buy land here.
Yeah. Do you think that this overall, the delay in making a decision about the Crayford Farms, Charles, could have somehow hurt our international reputation?
I don't doubt that it has to a certain extent, but nothing that's not recoverable. You know, the Crayford Farms, the reason it took so long, in order to allow that to go through, the government had to identify significant and identifiable benefits of it going to overseas ownership instead of it being in New Zealand ownership. And you know, they've produced a report, Overseas Investment Office has produced a report where they've identified 12.5 million of additional development expenditure on the farms that Shanghai Penguin has to do, as well as a number of transfers of land to the government, such as par sites and waterways and protection of natural areas. So
do you think the Chinese have done everything they possibly could to make sure that this farmland does a good job in future generations?
They've done everything they possibly could to get the process through, and I think it's up to the government to ensure that what they've said they will do in the future in terms of development etc., is actually put in place. So the proof will be in the pudding to some extent, and in this case that might be somewhat of a test case.
You know, and I'm still struggling to come to grips with why New Zealanders didn't back ourselves. Why didn't Landcorp come up with enough money? You know, I mean, why didn't they, to buy this land after all of the controversy? What do you think, Grant?
I think a lot of it may be in terms of the effectively the investment horizon. I think the Chinese, the Europeans have a much longer investment horizon than we do in New Zealand. So we're not talking sort of a 5 or 10 year kind of thing. They're talking 20, 30 years. They have in the back of their minds what the population is likely to do. And obviously as a Chinese corporation, they'll have a reasonable amount of inside knowledge in terms of what's happening in China. So it's that long-term game. I mean, just coming back to some of the points that Charles was making, the key part about the way the decision has been decided is, in the first time it went through, it was basically a before and after. So it was an objective test about how much money the Chinese corporation was effectively going to pour in. The with or without is actually quite interesting. It's a subjective test, and it's basically saying, comparing what they're going to do relative to what a New Zealand farmer might do.
Would have done, yeah.
And then so that's quite interesting because this is very subjective. In terms of the $12.5 million benefit in terms of investment, the OIO said that a typical New Zealand farmer would have put in $6 million. Now, how exactly do they go about justifying them?
Yeah.
Here's a piece of string. How long is it?
Yeah.
It is a very difficult sort of thing they've had to go through.
Do you think now that the decision's been made, we've kind of opened the floodgates to a lot more foreign investment of farmland, particularly from the Chinese?
I think they'll be looking at the hoops that Pengjin had to jump through, and they'll be scratching their heads, to be honest.
Do you think it will have a chilling effect, Charles?
I agree. I mean, there has been a lot of hoops to jump through. It's taken a lot of cost on the buyer's part to get to that stage. So I agree there might be some scepticism, except for particular valuable purchases. I suppose one of the other things they identified, Overseas Investment Office identified, which is access to markets in China. And once again, it'll be interesting to see whether that benefit actually bears out in any different form to what Fonterra can offer.
Meantime, the Chinese company hasn't wasted any time. They want to make infant formula, among other products, and sell them directly into the Chinese market. And they've signed off on a couple of names for their products, 2 brands, Nature Pure and Pure 100, apparently to cash in on New Zealand's 100% pure marketing. Is this a rip-off, or is it just being a good businessman, do you think?
Well, no doubt it's a good business decision when part of the branding is already there. The question is going to be management of that branding, in terms of if it's managed properly and it's good product, then that branding will be protected. But hopefully there's safeguards in place to prevent mismanagement of that branding to a low quality product.
The company now says that it's going to look into setting up a processing plant of its own. It's not quite sure how it's going to handle that. Do you think they should be building their own plant here, or working in with somebody else already on site?
I mean, that's one of the key objections, is this degree of vertical integration, so effectively taking the production and the manufacture and effectively cutting it away from New Zealand. I know in terms of the supply to Fonterra, there are also issues over effectively the payments in relation to that as well, but that's exacerbated when they have their own firm and they get the subsidies through the milk supply agreements. I think it is an issue. I think it would be an issue in terms of scale. I think in terms of what's there at the moment, it's it's a relatively small, well, one would say insignificant piece of the overall sort of puzzle, but you wouldn't want to see a proliferation of it.
The whole point of Overseas Investment Office criteria were to only allow investments that are in New Zealand's favour. Once again, I sort of see this as being a bit more of a test case on the scale as to whether these benefits do in fact bear out.
Okay, thanks very much. I want to thank my guests, Grant Abbott and Charles Rao. Be sure to check out our website for all the latest news. Meantime, lest we forget, Anzac Day is upon us, and it's a tender time to remember all of our fallen heroes. keep the faith. See you next time.